Tania Chen is with us here to talk us through the significance of this fix today and how this fits into everything else. So what's going on? Let's start with today.
Yeah, I love that chart because actually I feel like it kind of shows you that even late last year they were doing even more to boost the yuan strength, right? So we're not even at those levels yet. A couple of things, I think the past couple of days they've obviously done the rebuttal and it's been kind of stronger fixes again, right? But one thing you've noticed is that they've kind of allowed the yuan to weaken past the 7.2 line, which that was a line that they had previously held for the last kind of 6 months, right? Yeah. So that's one interesting aspect of it. We have seen some state banks kind of selling dollars again to kind of defend around 7.2, but clearly right now the yuan, the onshore is 7.22. And then I think the other question is, what is the next line in the sand, right? And 7.3 was kind of an area that they were kind of capping it at late last year, which is where you saw on that chart how much a fix was kind of being held at that level. And I think one way to look at it is actually implied volatility. We haven't actually seen implied volatility spike to the levels that we saw when the yuan was actually pushing 7.3. And it also hasn't really spiked to the same levels that we saw in the 2018 kind of trade war episode or when the yuan was devalued at 2015. So actually, in terms of a volatility gauge, this actually doesn't seem too bad.
Well, okay, speaking about line in the sand here, so what are the numbers now that people are talking about?
Yeah.
The new numbers.
It's actually quite funny. So our team did a story today on kind of like the conflicting messages around what the PBOC is saying, right? And it's actually led kind of to a divergence in what Wall Street is saying about the yuan. We have some people who are still very bearish on the yuan, 7.4, and that's partially due to like the deflationary concerns, the economic considerations around the economy, and also not to mention just the Fed and the interest rate differential, which has dragged down other key Asian currencies as well, including the yen. And I wanted to actually kind of go back to another spread that you were kind of, that I wanted to bring your attention to, between the offshore and the onshore. And one way to also look at kind of where the market is testing that direction of the currency. Right now, or at least in the previous sessions, we saw the offshore and onshore spread around 300 pips. And usually when that happens, you can see that means the onshore sentiment is actually quite bearish.